Welcome to the Capital Spreads Weekly Update. Today's Wednesday, the 31st of March 2010. Well, the week so far, the equity index markets continue grinding higher and sitting pretty much at year highs, while the currency markets have started to strengthen the US dollar and weaken the euro. The index markets seem to be benefiting from the continued supportive and loose fiscal policy of many central banks around the world, and that doesn't look like it's going to be changing anytime soon. While many investors are focusing on the Greek debt problem and questioning whether Greece can actually rein in its large budget deficit, this is despite the fact that Greece does have in place agreements with both the IMF and Eurozone. If it does run into problems, many investors are still jittery and have been selling off the Eurodollar. So as it currently stands, Eurodollar is trading around 134.50, having hit a low of 132.68 towards the end of last week. I have a chart to show you of the Eurodollar and what I think it will do going forward. Eurodollar seems to be in a downward trend, a trend that started back in the end of 2009, and that trend doesn't look like it's going to be changing anytime soon. If it carries on at its current rate, you could see Eurodollar hitting a low of about 130.00 before it does find any support. However, we've got to keep the 135.00 level in view as well, because it does act as very much as a pivotal level. The last time it broke through 135.00, it went down to 132.68, and most recently it acted as a resistance level just yesterday when it hit 35.00, and Eurodollar bounced all the way back down to 134.00. The equity index markets are pretty much where they were 2 weeks ago when I last commented on them, so I believe many of the comments I made last week, 2 weeks ago, still apply. So the FTSE, as it currently stands, is trading around 56.90, up about 18 points in the day. The DAX is trading around 61.40, up about 8 points in the day, and the S&P is trading around 11.71, down 3 points in the day. Again, I've got a chart to show you of the FTSE. The strong uptrend in the FTSE is still in motion, and that doesn't look like it's going to be changing, at least in the short term. The wedge formation is still there if you take the resistance level of the FTSE around 56,670. Now, there's similar patterns in both the DAX and the S&P, so based on that, it looks like the FTSE could certainly power higher from here, and 6,000 certainly seems to be a realistic level. 56.50, which was previously a resistance level, is now acting as a support level. In terms of oil is now back up, trading around 80 to 90 at the top of its $75–83 range. Now, it's been trading within this range for the last few months and shows no evidence of actually wanting to break out higher than this. However, we do have the oil inventories coming out later on today, so that could certainly provide a bit of impetus. If that is the case and oil does break through on the upside, you could certainly see a target of around $91 for oil. In terms of figures for the week going forward, it's going to be a relatively quiet week because it is Easter. However, there are a couple of key figures to keep in mind, starting with the UK PMI coming out tomorrow, as well as the ISM manufacturing coming out of the US later on in the same day. Now, both of those are expected to show a slight improvement. If that is the case, you could possibly see the index markets powering higher from here. I think the most important figure will actually be the US non-farm payroll figure coming out on Friday. Now, most of the other global markets around the world will actually be closed. So if this figure comes in much better than expected, you could see a strong rally, certainly. The figure is actually expected to show an increase in jobs of 190,000. Now, that's supposed to be the biggest increase we're going to have in non-farm payroll we've had in 3 years. So any improvement on that will certainly see a big move and a big reaction from the markets. In terms of client positions, many of our clients continue to fade these moves, believing that the index moves have been overdone. So as a result, they are short the S&P, the Dow, the DAX, as well as the FTSE. They also maintain short positions in oil, and they don't have any large positions either in currencies at the moment. In terms of themes of the week, I think the theme of the week has to really be whether the move we've had so far is due for a correction or whether it's fairly valued. Now, many of the technical indicators seem to imply that the trend upwards could certainly continue, especially considering if you look at the wedge as well as the trend in both the FTSE, the DAX, as well as the S&P. My own view seems to be that that certainly seems to be the case, and especially if we get a very positive figure coming out of the non-farm payroll on Friday. It remains to be seen what actually happens. As usual, if you have any feedback, it's media@capitalspreads.com. Thank you.